In today's session, we would be focusing on another question which deals with the preparation of cash budget. The question goes like this. From the following forecast of income and expenditures, prepare a cash budget for the month of Jan to April 2014. They are expecting us to prepare the cash budget for 4 months and they've given us some details. Now let's look at the details which has been provided to us. They have given us details from November 2013 until April 2014. In the question, the informations which are given to us includes sales, purchase, wages, manufacturing expenses, admin expenses, and then selling expenses. Now remember, when we are preparing the cash budget, there are two important aspects which are important. One is your receipts and the other is your payments. Sales would amount to a receipt, purchase, wages, manufacturing expenses, admin expenses, selling expenses. These 5 items collectively will work out to be your payments. Now let's look at the conditions which have been given to us. Additional information. Customers are allowed a credit period of 2 months. So what is this? This is nothing but this is what is applicable for the sales item. So this is what is applicable for sales item. Second thing, what is given to us is a dividend of 1,000 is payable in Jan 2014. So what does this correspond to? This corresponds to nothing but your sales item. This corresponds to nothing but your sales item. Next, what has been given to us is that capital expenditure to be incurred, plant purchased on 15th January, rupees 5,000. A building has been purchased on 1st March and payments are to be made in monthly installments of 2,000. There's a plant which has been purchased on 15 Jan, where there is an outflow of 5,000 rupees. There's also a building which has been purchased in March, where there's 2,000 rupees which has to be paid each month. So these both would amount to be additional expenditures. Creditors are allowed a credit of 2 months. This corresponds to purchases. Wages are paid on 1st of next month. So this month's wages will be paid next month. Lag in payment of other expenses is 1 month. So for all the other expenses, there is a delay of 1 month. All the other expenses, this month's expenses would be paid in the corresponding month's expenses. Balance of cash in hand on 1st Jan is 2014. On 1st Jan 2014 is 15,000. This is nothing but your cash, opening cash balance for 1st of Jan. So with this note, let's go about with the preparation of the cash budget for these 4 months. The students now have prepared the format of the cash budget here, and what I've done is I have got the format ready. And remember, we are preparing this for 4 months, starting from Jan, Feb, March, and then April. Remember the sections of the cash budget. You have the opening cash balance, followed by the cash receipts, which will be accounting for the inflow of cash, followed by the cash payments, which accounts for the outflow of cash, and then we have the closing cash balance. So in order for us to calculate closing cash balance, we have to sum up the opening cash balance with the cash receipts, subtract the cash payments, it will give you the closing cash balance. Also, it is advisable as a thumb rule, please go about filling the items in first before starting to solve or starting to work out the cash budget. It is always advisable that you fill out the items at first before you go about with the preparation of the actual cash budget. Now we have the only cash the cash receipt that we have over here is sales. Also, there is a condition with respect to sales, and what sales tells us is that we have a credit of 2 months. So which means if a customer purchases something from us in Jan, we are expecting the customer to make the payment only after 2 months. Now remember, the time frame for which we've been provided or we've been asked to prepare is effective from Jan. So in the month of Jan, which month's sale would he be settling for? He would be settling for the month of November. So the previous year November, which is November 2013, that month's sale would be settled here. Okay, that month's sale would be settled over here. So which is what we have done. So we have considered the sale for month of November. In the month of February, the customer would be settling for the month of December. March, they would be settling for Jan, which is 25,000, and in April they would be settling for the month of February. So I've accounted for those sales. Now remember, the only cash receipt that we have over here is the sales. So which is what we have done as of now. And let's consider the total cash receipts. Total cash receipts have also been considered. We just have to take the sale as it is. Now let's move on. Now we have the cash payments. Now what are the cash payments that we have? Cash payments that we have are purchase. We have purchases. Then we have wages. Then we have manufacturing expenses. Then we have admin expenses. Then we have selling expenses. So this is what we have got directly from the projections, or this is what we have got directly from the table. But this is just started. We have some more expenses. Now, what are the other expenses that we have? We have payment of dividend. Dividend, well, it was mentioned in the additional information. It was mentioned in the additional information. Also, we have some capital expenditures. We also have some capital expenditures. So these are the information that is conveyed to us in the additional information. Now let's fill out these details. We know that there is a dividend of 10,000 which has to be paid in. There is a dividend of 10,000 which has to be paid in the month of January. There is a dividend of 10,000 which has to be paid in January. Next, what we have is we have the capital expenditures. Capital expenditure, we have to pay 5,000 in Jan. There's a capital expenditure of 5,000 that we have to incur in Jan. Along with this, in the month of March, we have to pay 2,000. April also we have to pay 2,000. Now let's move on to the other expenditures. Other expenditures, what has been told to us is that creditors are allowed a credit period of 2 months. What does this mean? So if you are making a purchase in the month of, Jan, you would be settling the payment only in March. Now,
sorry to interrupt, but
there was a small correction. The dividend amount, this is payable not in Jan, it is payable in April. Thank you for noticing that. Dividend, it is not payable in Jan, it is payable in the month of April. Now purchases, let's go complete off the rest. Purchases, in the month of Jan, you would be settling the purchase for November. So November's purchase is 15,000. February, you will be settling for December, which is 20,000. Here you will be settling for Jan, which is 15,000. And then February, and in the month of April, you will be settling for February. So this has been completed. Now, what are the other conditions that we have? Wages are paid on the 1st of next month. So with regards to payment of wages, there is a 1 month delay. So in the month of Jan, you would be settling the wages for December. in the month of February, you'll be settling the wages for Jan. In the month of March, you will be settling for February, which is 3,000, and then April you will be settling for March, which is 2,400. Then the next condition that has been given to us is that lag in payment of all other expenses is 1 month. So there is, for us to settle out all the other expenses, there is a delay of 1 month. So manufacturing expenses in the month of Jan, you'll be settling for December. Here it would be for the month of Jan, which is 990. Here it is for February, then here it is for March. Similarly for admin expenses, now selling expenses, the same thing goes for selling expenses. Then now let's calculate the total cash payments. Now let's calculate for the total cash payments, and let me just add up. So how do we calculate total cash payments? Total cash payments are you just have to sum up all your payments together. Okay? So you just have to sum up all your payments together. So with that, we have fixed in all the items. We have populated the amounts as well. I always advise you to follow the same thumb rule. It would be advisable for you to go in the same manner, so that it would make your computation a lot easier. It will make your calculations a lot more easy. Now let's just go about with this. Here we have an opening cash balance of 15,000. So opening cash balance is 15,000, and opening cash balance is 15,000. Then based on that, we will have to go about calculating for the others. Okay, now how do you calculate total cash available? Total cash available, you will compute that by adding up opening cash balance with total cash receipts. Okay, so that will be 45,000. Then how do you calculate the closing cash balance? Closing cash balance would be cash available minus your cash payments. Okay, so for the month of Jan, your closing cash balance is 18,985. Now, what is your closing balance for the month of Jan will be your opening balance for the month of February. And here, what will happen is opening cash balance plus cash receipts minus cash payments. So first, let's calculate the total cash available. This has been done, and this would be 53,985. 53,985 minus 25,190. This will be 28,795. Here, 28,795 is your opening balance for the month of March. So let's calculate this. Plus 25,000. This will be 53,795. 53,795 minus 22,720. This will be 31,075. 31,075 plus this plus 30,000. This will make up to be 61,075. 61,075 minus 37,290. This will be 23,785. So with that, we have completed the preparation of cash budget. As required, we have prepared the cash budget for the 4 months.